The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. This Thursday, August the 21st. My pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time. Tiger Technicians Hour, as you heard, 877-927-6648. What a market this is. Just look at these candles I'm showing in the E-mini S&P 500 September futures. Look at those green candles. One tiny little red candle there. That is one tiny red candle there, and then a long-legged doji right there. And look what's happened. We've just gone continually up to all-time highs. Leg B, I have to call it leg B, and I may have to make it blue. This is not an F/B. This is definitely a leg B. Very strong. And the 120-minute chart is in leg D, having recycled. And how would that work? Could it be B? Just for now, I'm going to call it DY because it's got this rising wedge formation. Shows you the resistance right there at the almost the high of the day, which would be 1989.75. Give or take, I'd say 987s, 989s, and the 991s are the levels. Stair-step moves to the upside. It's kind of what we've seen all week, and that's what I'm looking at as a potential resistance. But the technical stochastic is at 95%. That is really strong. This is very interesting because the MACD is flat, and basically what happens to the MACD is when it's flat, it maintains the signal that was previously given. In this case, it still maintains the up signal, but it's flat, and it really says that the upside from here should be fairly limited. And if you're looking at all the other price movements, you will see that the number of candles that it's taken to move to the all-time high it's quite considerable, whereas before it would just vertically go up with big bars and all the way into new highs. We don't know about all-time highs because that goes back quite a way. So, and the day is in leg B. So let me just move this away, and then I'm going to keep it in this corner here so we can do something together. I'm going to run the numbers. The Dow is up 76 at 17,055. So the all-time high was the all-time high was 17,151. And right now what we have, I didn't draw it in here, I drew it in here in this particular chart that I show my subscribers to my opening call every day, that this particular move, especially with the last few candles, absolutely makes this buy mode. And I've been discussing that all week, that if it was to break, and certainly if it was to break above the high of that ugly candle of the 31st, the high of 16,869, then I have to consider that this is a buy mode that should go in the Chapman wave to at least a D. What I had been thinking was that the Dow would make some kind of a doji candle, and the doji candle should have a bit of a pullback we wanted to actually add to long positions. We don't have any shorts right now, and we wanted to add to the long positions, and for potential leg C to leg D in the daily. And what I said is, my thinking was that somewhere around 17,151, the all-time high, we will get that moment of truth. And the pattern I've been looking for is a V-shaped pattern that resembles a pattern that I jokingly call the Groucho Marx eyebrows. And basically what we're looking at is the left side high of the 17th of July at 17,151 has, in fact, created some kind of an arch formation. That comes pulling back very sharply down to 16,333. That's the nose. And now you're going back up, and that should create some kind of a divergence that is reflected in some kind of a sell-off. And that sell-off could come from a little higher, 17,000. I'd say 17,230 would probably be the limit, because if it goes much higher than that, then we're looking at something very different. But if that occurs, then there should be a pullback, and that pullback should take you back under 17,000. That's the moment of truth as to what's going to happen, because it would involve weekly charts, monthly charts, and a whole bunch of things, as well as the volatility index, which right now is trading at 1168. 1180 was the low of yesterday. Was it 11? Sorry, that wasn't 11, that was 1160. So 1160 was the low of yesterday, and we're looking at, so far, the low is a little bit higher. Parallel. Oh, 1160 and 1160. We've got parallel lows, and if the market continues rallying, it will make a new unrecovery low. What do we call those again? A new low. Call it a weekly low. And what's happening here is that you can see that the up channel resistance in the Dow, which came in at about 17,020, has been broken. Now the Dow is up almost 80 points. And I've got this as a leg F in the 120-minute chart, so we're going to be following this quite closely. Now, so that's looking at the one time frame. So in this particular instance, you've got, why is this not updated? That should be A. That's because I always use the one in the front. So here we go. This is A. This is a very powerful leg. One of the most powerful leg A to leg B that I've seen in a really long time. I don't want to go there right now. I'll try to remember to go there just now. So the weekly chart is making that V-shaped formation, which can be very positive, but my thinking here is that we're going to bump into a lot of resistance coming soon. How much down we go is the big issue. But in the meantime, back at the charts, you've got 17,151 was a peak F in the weekly. A new high makes it a G/A. If it's an A, that is extremely powerful, and says we're going to go all the way into the fall to a new all-time highs. And the monthly chart is in leg E. I thought there was a good chance of a peak E, but now we're looking at maybe an extension. We're going to be watching this really closely, because as I've said for quite a while, I have no singles in the weekly, in the monthly at all, other than the hint of two of them, and that's usually early. And in the weekly chart, there was a pretty good pullback. And in fact, the stochastic and MACD did drop sharply. They've not really crossed a very big positive territory. So this is individual stocks that are doing that. So let's just run these through. S&P, SPX.X, what we've got here is a single leg. It's almost got the look of a single leg A. It's actually leg B. And from the low of 1905, was it 1904.78, back on the 7th of August, this is just a spectacular move to the upside, breaks out. And in fact, here is the real test. Because is this a recycle? Is this now leg C with about 3 weeks to go before we make some kind of a serious top? Or is this a breakout that I have to call not a G but an A in the weekly? I don't know yet. I'm just going to draw the channel lines in, just extend them a little bit. There you are, one. There goes two. And we're right in the inside track repellent zone right now. From here up until, depends when it happens, but let's say it's next week, they can go all the way to 2016. 2000, can you believe the S&P was once at 666? Not a bad move. And right now the S&P is up 5.89 at 1992.40. And now this is going to be really important. The Q, and the 100, did I finish 100? Yeah, that's D, E, and this is A, B. This is leg C for most of the indices, 120-minute charts. So that says, yep, you could get a bit of a pullback sometime early this afternoon, but we could still go to D by the end of the day, maybe have a pullback. The pullback, I'm expecting just a brief pullback, comes maybe tomorrow. Let's go on. You got the QQQ series. Now, this is really important. Leg E in the 120-minute chart. There's a little difference here. And you've got leg C, F/C in the weekly, F/B in the monthly. And look at this. This is still only leg B. A huge move from 93.89 to 98.89, all in just two legs to the upside. This is still a leg. And because today went to a new recovery high above the 98.90 high of yesterday, Today's high is 98.95. This continues leg B, and we're still expecting C and D, so it's very positive. I want to just quickly go to the IYT and see where that is. Yep, that's starting to stall here, and you've got that pattern I was talking about is shaping up here in the Groucho Marx pattern in the weekly chart. I'd like to go to the IWM. It's lagging terribly, and that's usually a sign to say that if you haven't got all the little ducks in order, you got to be a little bit careful here. Doesn't make the rally suspect because the rally is the rally, but it does make the sustainability a little bit suspect. Now I want to go to gold. Geez, I've just been talking about gold as if it's in a bear market. It could have some pretty good rallies to the upside. But that H pattern that goes to an M pattern was formidable. And look at this. Gold is down $16.50. That's the updated. Yeah, about $16 to $17, around about the 1277 level, 1278. And you're about to test uptrend support in this I would call it a symmetrical wedge formation, but there's a greater force with these H patterns that the 1250 level, 1262 to 1241, the low of the week of the 6th of June, that area is going to be tested quite soon. And remember, these patterns are just potent. Look at this. That H pattern that goes to a lowercase h pattern that goes to the M pattern and then fails and it retests. And I spoke about this, that if the support at 119 gets taken out, that's for 2 weeks in a row, 2 months in a row, April, May. Now, is that May, June? I think it's May, June. May, June. If that gets taken out, there's a good chance you're going to test 114.46. But what I said is that I've got for December, sounds like a long way away, and it feels like a long way away. For December in the monthly chart, a test, wow, I can't believe this, but I'll say it anyway, of the 105 to 102 level. 102.28 was the low in February of 2010 for gold. With all the conflagration things that are going around the world, I find that hard to believe, but that's what the chart says. And here's that support right there, 119.42. There's another arch formation. If that gets taken out, you really don't have much support until you get to that 114.46 low of the week of the 3rd of January. So let's see, what am I missing? Oh, the dollar. Look at this, the dollar. Dollar had a great move to the upside in what I'm calling a leg D, at least for now. It has all the characteristics of the Chapman wave stalk leg formation, and that stalk leg formation says that you could have a one-to-one expansion that would take it towards the 82.53, 54 area. Well, the high so far has been 82.36, and it's leg D, and I'm suspecting that we will get some kind of a pullback, and that pullback should test the 81.78 level to 81.63 in the dollar index. And just to put that in perspective, let me just give you the GLD. The GLD is broken on left side support. So, yeah, I don't know how much of a bounce it could be, because let's just look at the USD JPY, which is the Japanese. Oh, very interesting. Also leg D, like the dollar. Oh, I'll come back and talk about this as well, but we'll go to Victor and Paramus as soon as we get back. Basil Chapman, Tiger Technician.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're looking at the Dow that's up 77. That's 0.45%, but the S&P's only up 0.28%, up 5.52. And the Qs, the NASDAQ trading vehicles, is up 13 cents at 98.83 and only up 0.13%. So there's a divergence here. My suspicion is that we are really close to a leg B and a peak B in the Dow and the S&P, and where the pullback stops over the next day or two. You remember, in a bull phase, you want 1 to 3 days, no more, 1 to 3 bars of a correction, and then you break to a new high, or a new recovery high, that is. And on the way down in a bear market, you want 1 to 3 sessions, and then you're on the way down again. So we're going to go to Victor in Paramus, New Jersey. Victor, how are you? Victor listening in with a little delay. Hi, Victor. Oops. Oh, I'm sorry, Victor. I didn't realize that you were dropped. Whoa, that's a pity, because I tried to get you as soon as I could. But I believe, let me check. Yeah, Victor, if you are able to call back, just call back and just say, hey, I'm here. But I'm going to look at T, which is telephone. I'm not sure whether you are long or whether you're looking to short or what the story is, but are you back? Hi, Victor.
Yeah, I was just wondering, is there a buy signal on that yet or no?
Well, let me ask you this question, because it's absolutely pertinent. The question that I have for you is this a dividend play as well as a longer-term buy and hold that you're thinking of? Is it a shorter term play, or is it just that you like something about the chart?
Yeah, we're hitting a 13-week low versus a 13-week high, so I figure we might bounce off it, and we're at the 9-day moving average.
Okay, good. Okay, so now let's do this. The monthly chart is made. There was a divergence between the peak C that it made in the Chapman wave back in September of 2012 at 36.54. MACD stochastic, everything we're looking very good. It pulls back, makes a U-shaped formation. That's that drop bucket that I look at. And then what happens, it goes to a 39 round number high. This is in April of 2013, and it pulls back. Then it tries to make another cup formation, but it fails. There's a right shoulder failure pattern. However, then there was that sudden burst of good news, and that was back in February. No, it was March of this year, where it goes from 31.76 to 35.50, continues to climb. It goes to peak A, and then it goes to B. And now the weight of evidence suggests that there's a chance that it's going to be pulling back further in the monthly, even if there's a little bit further of a bounce. But the candle with that long wick of the 1st of August of this year, 1st of August, wait, how can that be? Well, we were in, oh, that's right, 1, 2, 3, this is the 4th week, okay. So that says that candle, until there is a price spike towards the 36.30 to 36.42 area, which would hint that that very long wick, that inverted candle, long wick to the upside, little body at the downside, it's like almost like a dragonfly pattern. It says that until we do that, and especially that 36.86 high back in the week of the 9th of May of this year, until there's substantial upside action, there is no real sustainable upside move yet that I can see. Now let's get to that's the weekly chart, unless 35.60 is taken out, and it's at 34.67 right now, so it's only a point away. That should not be a big deal for a stock that has a habit of trading quite wide parameters every week. But here's the issue. There was that big spike, and it was a news-related spike on the 29th of July. The telephone teased the symbol, trading at 34.68, up 15 cents, spikes up to 37.78, 37.48, that is. Ooh, nearly made a mistake. That's 37.48, edit 4 right there. And then what does it do? It comes all the way back down. It takes out the level that it spiked up from. It takes out the 200-period moving average, and now that is going to be resistance. That's the reason why I asked you, because if you are looking for a dividend stock, because it gyrates so much, I would say that, yes, it's a dividend stock, because if it pays, say, 4.8%, I'm not sure what it pays. Maybe it's somewhere around. Do you know what it pays as a dividend? I'm not sure if Victor got bumped off again, having trouble with his Verizon, I don't know, or telephone or Sprint or whatever it is. So this is what I'm looking at, Victor. You probably are listening on a computer, but what I'm going to make is a suggestion here. I'm going to suggest that if you're interested, if there's something that you're looking at, the best time to buy it is right here at 34.68 for two reasons. And it will only be a small position. Whoops, we've got a break coming up. I'm going to do a little bit of work to show you something on the 120-minute chart and the daily.
Opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back, and in fact, we're going to continue with Victor's request to look at telephone. So, Victor, this is what I'm going to recommend. Even though I'm thinking there could be a little bit of a pullback coming up here in the general market, just a brief one, and then we go into leg C and then leg D in the Dow. I'm going to suggest that if you're interested in telephone, just for the moment, you have to forget about a dividend, because I'm not sure how long the trade, I'm treating it as a trade, will last. There definitely was a characteristic in both the daily and the 120-minute chart of an H pattern that goes to an M pattern. It's still there, but it's made a higher right side low. Instead of going to test the 34.17 low of the 7th of August, what's happened is the low of 3 days ago is 34.33, and it says there's a good chance they're going to try now to test 34.96, just 30 cents higher, the 200-period exponential moving average. But that would be very nice action, because if it actually managed to get to the 35.50 area by Wednesday week, let's say, that would be very good action, and just say, you know what, counter trend rally, I'm in a trading band, I'm displaying very clearly that I'm in a trading band, and I'm trying to go to the upper level where there's going to be a lot of resistance at about the 35.50 area, and if I'm able to go over that, it's going to be very good. And that's why I'm saying this. I would not get a full position. I'd just get a small position, and I probably would add to the small position 1 penny above 34.97 at 34.98. the high of the 15th of August. Why? Because that should go at least 15 to 20 cents higher if it even gets there. And then you can just put a real tight stop on that second position. But my eye says from the technicals that the weekly and the monthly are not yet done with the consolidation, and that if at any point it was to take out 34.17, let's call it 33.50, at any point on any weekly basis, if telephone takes that out, 33.50, there's a real good chance that the 33.29 level, the 200-period exponential moving average, is going to be hit sooner rather than later. So it would only be a trade, and if it starts to work really well, at least you've got yourself a nice couple of positions in the stock, and you might be able to hold it long enough for a dividend. I don't think that's the case. That's why I want to take a moment to talk about it. The 120-minute chart is going to be a clue for the short term because it needs to get to the 35.85, 35.93 area, and that'll be a good sign. So you can go step by step, but I would not think of it as a more intermediate term position for many reasons. You know, there's also going to be a lot of competition. Sprint is now saying, well, they're making fantastic offers. So because Sprint has brought the monthly fee down huge, $50, I think, in one case, $100 in another case, this is tremendous. This is a tremendous challenge to the other companies. I mean, this is what capitalism is all about. That somebody comes in and just takes off every single guard, safety factor, and says, we're going for broke, might be broke, but we're going for broke to go for the lowest price. We want to do this no matter what. We have to do this because it's our business plan. We'll get great advertising and all that stuff. We get a lot of new people, and it's only for new people. I think there's going to be a big outcry with people who've been there for a long time saying, hey, we've been your faithful customers. What do we get? And that's going to in turn say Verizon, and telephone are going to be under pressure. And that's kind of what the charts are saying. And in fact, as we're speaking, telephone is just going up another few cents. So yeah, that's the position. So I hope that helps you, Victor. Now, I want to do a couple of things. I wanted to show you a stock that we missed by just a couple of cents the other day. Now you wonder why would I worry about a couple of cents in a stock that's trading at 103 or 4? This is Berkshire Hathaway B shares. One of the reasons is, come out. One of the reasons being that it is at all-time highs. I didn't want to. I wanted it to come to us. I wanted it to come to us in a certain range. And if it didn't come to us in that range, then I felt, you know what? At this price, I'm not expecting all that much in points to the upside. I just wanted to be there in case I'm correct in saying that the weekly chart is only in leg C. So I wanted some kind of position for my subscribers. Well, we missed it by a few cents, and it's now at 136. So we missed 4 points, about 4% on the upside. We have other longs. That's fine. They're working. But I wanted it because in a way, like GE, it's kind of a benchmark for something. And in this case, it's a benchmark for Warren Buffett's absolute uncanny ability to be able to pick stocks, companies, actual companies, and to treat those companies not as stocks, but as companies, have people running them, and those stocks those companies do really well, and that's then reflected in Berkshire Hathaway. GE, on the other hand, is just a different thing. It's a pilot light for me, for my Dow Quartet, and it's in leg D, starting to stall here. The 120-minute chart says this is an alternate count. Well, I'm calling it leg C like many of the others. It says maybe a little later in the day, the 120-minute chart towards the end of the day might make one sudden spike to the upside to give us D, and we get a bit of a pullback on Friday. But in the meantime, it's gone above the 200-period exponential moving average and in the 120-minute chart, and that's good. And the stochastic and MACD are very good. So I'm looking at it, and in the daily chart, you get 93%. And I'm saying to myself, are those weekly charts, the ones that have gone to new highs that I've called alternate counts, maybe leg C, telling me that we're going to rally into September before we actually get a pretty decent pullback again, another attempt at a pretty decent consolidation? And we're getting the public saying, oh, man, I can't stand this anymore. I've just been I'm waiting and waiting and waiting. for a decent pullback, and I'll probably be terrified to buy the pullback. We did get one just recently. It wasn't a terrifying pullback. It was a pretty decent pullback, though, for this particular market, and certainly in GE, going from the 27.53 to 24.73. That's 3 points, so that's about 13%, let's say. That's a pretty big hit to the downside. And then the weekly chart was looking terrible. Now the weekly chart isn't looking terrible. It's looking better. Not great, but better, because the MACD and stochastic haven't really given us good clues. And I said monthly charts that making that pattern that says H, lowercase h, you might get a little bit of a rally, but don't expect anything more than another H. And then we're going back down to test the 24.32 low of way back in January, was it? February. And if it breaks, then 23.81 is the 200-period exponential moving average. And that GE will have to take out 26, it's at 26.34 right now, down 3 cents. It really will have to take out 26.80 to 20. It has to get into the 27s to really show that it's going back to test the all-time high. I'm not sure about that just yet. So I wanted to cover the Berkshire to show an economic perspective based on businesses, insurance, and whatever, furniture, oil, whatever it is. And when you look at GE, it's a different kettle of fish, different altogether, but I use GE as a kind of a pilot light template for my Dow Quartet. And UTX, which had a fabulous move off the bottom, but still looks terrible in the weekly chart, has gone from 103 to 110, $7, 7%, and that's good. Question of the day, would I look at IEP? I've not looked at IEP for a long time. When I last looked at it, it was horrible because this is Icon Enterprises. It was way down at the bottom. This is in April or so. It went down to 86.09. Now it's at 111 in leg A, B, C, another weekly chart that's in C. So A, B, and we've got C right there. Now, I had this all notated, and I'm sure why it's not notated. So let me just show you. This is going to be 4041. Okay, so this is A, B, C, D, parallel, E. So we'll take it from here. Low bar. That must have been that May crash that we had, intraday crash. B, C, and look at this, monthly chart. D, double top, 90.75 high, February of 2013, 89.95 high in May of 2013. So that's your peak D, and there's your peak E. And what happens? Everything turns down. Stochastic MACD that works. So what this is saying is that that high that was made, and I remember talking about this at the time, at 105 low, that's on the monthly chart of December of 2013, but 149.77 high. I mean, that was Icon at his peak. 149.77. Wow. 149.77. 149.77 makes a peak E, and now I can put the down arrow, but it's still a nice retracement here from the low that was made at 86.09. Wow, that is a 60-point decline. That is a huge decline. Now we've got leg leg B. This is the counter trend leg B in the monthly chart. Weekly chart is in leg C, having made a really strong rally. And here we've got the, always have to go back to the lowest low bar to check it out. Okay, so let me do this. Oh, it's going to take me a moment. A, B, C, D. There's your double top. Now it goes A, pulls back. And it goes A, B, C, D, E, F, and makes an F right here. So that one is the F. Now it pulls back, and it goes trough A, trough B, C, and it's just started a counter trend move. So the weekly chart is saying, yeah, that's good, but relative to highs, so far that's just a retracement failure, a retracement back towards the top. And now we've got leg C, I believe, A, In the daily. Okay, so here comes the question. I would have done that during the break, but I didn't have a chance. Yep, there it is, leg D. So we're looking at stochastic at 90%, very strong. MACD, still very strong. So I like this chart. I think it's acting very well. I would not be shorting this under any condition, not yet. And what I'm looking for is some kind of a pullback, a retracement. Maybe it's 111.03. Test the 9-period moving average of 107.87 to maybe the next moving average at 106.94. No signals yet of a sell signal. So that would be an opportunity to enter right there. And then what would I be looking for? That's going to be real tough, and I'll explain why. Because there's this very ugly candle of the week of the 14th of March. 116.84 was the high, 105.30 was the low. So I don't have any benchmarks there other than to say the cross of the 9-period moving average occurred at 111.21, and we're almost there right now. So I'd be looking at this and I'd say, okay, my next level of resistance would be between that 111 and 113.19 was the high of the 14th of February. So that little candle there, that's giving me a hint to say that's the resistance area that's coming up. So I wanted to, we got Brenton Martinez. Brent, how are you?
I'm doing just fine, Basil. How are you today?
I'm very well, thank you. You're looking at?
I haven't really had a chance to listen to. Unfortunately, I'll have to listen to you in archives. I'm not sure if you have talked at all about the candle that Chipotle is putting up today.
You know, I haven't had a chance to do that, but I did do some work on it right up until about 2 days ago, 689.45. And what I was waiting for, oh man, this is very interesting. What I was looking for was a pattern that is the inverse of the, an inverse, I can't put an up arrow there. Let me just change that. That's a plus sign. I'm going to do a little work and I'm going to show you something right now. This is a very interesting candle. Was there earnings news or something today? I didn't realize that there was earnings coming out today, but there's something going on.
There was somebody came out and made a comment about their potential earnings going forward, and so that big spike this morning. I just wanted your thoughts if we actually were to go negative today. Would that change your opinion as opposed to where it's at right now?
793. Yeah, I tell you why. Because this is on my 697. I really wasn't prepared. We've done it before very successfully to short CMG. I just have it off my radar because at 697, it was called $698. My thinking was that it can chip and chop and waste a lot of money unless it works perfectly right away. And I think that you've just pinpointed. Oh, look at that! In the daily. In the 120-minute, it went to peak A, B, C, D, E, and this is leg F, and now it's peak F. Opens at 697 round number. Oh, I love this. 697 round number. Goes to 697.93. Now it's trading at 681.16. So on my 120-minute chart so far, I've got a sell signal that will make a sell mode if it closes at any 120-minute bar under 680. That's number one. So far, the low is 679. 679, and it went to 697. That's a huge move for a stock. And now I've got the candle that says it's leg D. This is exactly what I was wanting to look at. Let me explain what it is. In a sense, it's like the inverse. I talk about the lowercase m, the H that goes to a lowercase m. So I'm going to do a little bit of work on this. Can you hold on through the break?
Sure, Basil.
Great. I tell you why, because I think we might be making some kind of a real short-term top in the general market here. So we're finally going to get our leg B to a peak B in the daily.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Folks, we're back, and what we're looking at here, let me just raise it a little bit there. What we're looking at here is that the Chipotle Mexican Grill, and just out of curiosity, I went there again the other day when I had a chance just to look inside. I've never really eaten there. I haven't really eaten there. I haven't eaten there. And it looked very interesting, and people seem to be enjoying the food tremendously, and certainly shows up on the stock. Now, there are a couple of things that I was figuring out, because they had a lot of chopped meat. In other words, they didn't have like steak and stuff like that, but it was all chopped. So it tells me that probably they're able to keep the expenses down quite a bit because of that. Anyway, back at the ranch, it's got a 120-minute chart. I'm almost sure I'm going to be calling this a peak F that went from a sell signal to a sell mode within 1 bar. No, within 2 bars. If the if this particular 120-minute bar closes under 679. It looks like it's going to. That's number one. Number two is, I would not be messing with this if I thought that it was just going to give you 6 points, 8 points. But if it was going to give you anything in the range of 15 to 22 points, I think it's worth it. And everything about the way it's just acted says that even if the general market is able to go up to leg B and then maybe leg C, I'm beginning to think that this could be, we don't know, but this could turn out to be a top. I wouldn't say a top of significance, but I would say that this could turn out to be a top that begins the rollover. And here's what I'm thinking. If you look at the weekly chart, there's a little expanding wedge pattern with higher highs and higher lows. I'm always amazed at, no matter what price we look at, how many times a chart is able to make those fractionally higher highs or fractionally lower lows to give you a straight line to the highs, and it exactly happened right here to the high of 697.93 today. And with the candle that's forming going into tomorrow at 4 o'clock, there's a chance that it either turns into a doji with the 4 weeks of tiny little candles. You remember how Apple made the tiniest little candle at its all-time high, the previous all-time high? Well, I'm wondering if Chipotle is not going to be doing something like that, at least for a consolidation of 20 to 30 points. I think you got yourself a chance right now. Are you in the position?
No, I just thought it was a very interesting candle. I wanted to hear your opinion because I love your analysis.
Well, the day is young because right up until 4 o'clock. Anything can happen with the candle. We have to wait for the bar to complete on whatever time frame you're looking at. So here's my thinking. You could start a small position now. I think you will have another opportunity with a bounce at some point over the next few days into the 683 to 685 level. If it goes much higher than that, I say start tightening your buy stop. But I can tell you this, that if Chipotle breaks 675 to 673 support by Tuesday or Wednesday of next week, that's going to be a real problem. So I think you've got yourself a nice entry point with the best risk reward. Of course, it would be better if it was earlier at the round number 697 high, just off the all-time high. But I think this is a good chance just at least to test the waters on CMG. But I would be adding to it if on Tuesday afternoon it's now at 675. The next bounce after that, I'd be adding to the short side. Still keeping that 685, 687-ish area as something to watch. But hey, I think this is a bad sign to gap up an all-time high and then have this kind of candle. Hope that helps you.
It sure does, Basil. You have a wonderful day. I'll talk to you soon.
Thank you very much for calling. Folks, this is Basil Chapman, Tiger Technicians Hour, and my opening call. Check it out, front page. Don't forget the $40 percent off front page of TFNN. It's a wonderful option to use. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.